everyone, welcome to the Money Club series. I am Uncle Zah and I'm joined by Uncle Sam.
I thought you were going to call me Auntie Sam then, but how you doing?
Oh, if you prefer that, Sam.
I was waiting for a burn. I expect them these days. I expect it.
Well, the reason why we're the uncles, well, we're old enough to be uncles now. Like, I'm actually an uncle and so are you.
Correct,
You
yeah.
know, I've got a nephew now and you know what's funny?
What's funny?
My sister-in-law was asking my nephew a bunch of questions. It's like this survey thing. They ask your son a bunch of questions, and she asked him. His name's Hendrix, right? She asked him, "Who's your best friend?" That was one of the questions, and it was Uncle Zah.
Oh, wow. How'd that make you feel?
Oh man,
Amazing.
I melted. You know, it was great.
Yeah.
It was great.
Nice.
So, have you ever had a rich uncle and a poor uncle?
Oh, I think probably at some stage during my lifetime they would have been rich and it might have fluctuated, but sort of, yeah. Yeah.
Because a rich dad, poor dad, right?
Yeah.
So, you know, like a lot of people, you know, they need to have these role models in their lives. And we want to be your rich uncles,
Yeah,
right?
yeah.
So for you guys listening, you know, we're your rich uncles. Get your, I was going to say get your advice, but get your information from us, you know, education.
Learn from both of them.
Yeah.
Learn from the poor one, learn from the rich one.
Which is really fitting for our topic today because, you know, the Rich Dad founder, Robert Kiyosaki, as everybody knows, is, you know, we're massive fans of Robert. And his stuff is just, mate, it's taught me so much. I read, the first book I read was Rich Dad, Poor Dad when I was 16 years old.
Same, yeah.
You know, I've read every single one of his books, sometimes twice, 3 times. And his principles are just, mate, they're world class.
I think why they're so good is that they stand the test of time. Doesn't matter how old you are or how probably long we go into the future, what he talks about is very fundamental and basic, and if you apply it, you're going to do all right. So half of that success is from it's just universality and how long it's going to go into the future, how practical it is for people.
So Robert Kiyosaki was my rich dad, right? Like I took, you know, I took a lot of education from him and, you know, treated him as my rich dad. He's actually the same age as my father, believe it or not.
Oh, wow.
Yeah, I think he's 72, 73. You know, like I've always treated him as my rich dad, and I guess our listeners should treat us like they're rich uncles, right?
Yeah.
I don't want to be called a rich dad yet because I don't think I'm that old, but what we want to talk about today are 10 rules that Kiyosaki goes by. Now, these aren't the only 10 rules Kiyosaki goes by. We could actually probably do 10 of these podcasts by 10 rules because he's got so
heaps.
many great quotes that mean so much. And maybe we will. This is part 1 of the 10 rules, and we're gonna go through 10 today because we only have a limited time, and we're going to talk about the meaning behind some of these quotes and principles, so that you know we can learn from them.
Yeah. You want to dive straight into it?
Let's get into it, Sam.
Let's do it. Number 1, I guess they're not in order of any type of importance or anything, but just numbered accordingly. Experience makes you smarter. I guess it's sort of self-explanatory. Can be applied in any type of space. Take, for example, working. I remember back in the day when I first started out in accounting and finance and tax, I didn't know nothing. I needed that experience and time in the game to get the knowledge to become smarter. And what that does, it makes you more confident. So you can continue building, get that momentum to sort of skyrocket in whatever you're doing. That's just a work sort of situation. But it could be in other parts like personal development, investing. Every time you're doing something, you're exposing yourself to new things, which you're taking on board, assessing and learning, developing. So I think very self-explanatory, but very poignant. Yeah.
And this is why a lot of people, they finish uni, right? And they expect that they should just get a job straight away. But it's actually a very difficult thing to do, to graduate from uni being book smart.
Yeah.
You know, like let's say you leave school straight away, high school, that is, and then you go straight into uni.
Yeah.
You know, you might work part-time and all of that sort of thing. But let's say you just focused on your studies for 3-4 years and then you get out 21, 22 years old, try and get into the workforce, but it's difficult, right? I remember, I've never really used my degree to get a job, but I remember when my brother left university, and he found it difficult to get a job. And I used to think, oh wow, don't you go to university to get a job?
Get the better jobs.
And it was really hard for him. And I heard that story over and over again, and I realised is that employers, and I'm an employer, would prefer experience, practical experience.
I think, very, very true. Academic experience or that finishing of a degree doesn't necessarily mean anything. You're very green still. So where you're going to get that value you can provide to people is by doing it. And you're only going to get that by being in that space and acting.
So let's convert this to, say, more money and investment. And, Robert Kiyosaki's actual quote for this principle is, every time I did an investment, whether real estate or business, I got smarter, right? And I think the problem with a lot of people is that they actually don't get stuck in doing anything. So, for example, on my journey, I've bought great properties, I've bought average properties, I've bought bad properties, but every property I've bought, I've learned something new, right? And I think the problem with people is that they take so long to just make one investment that by the time they've done it, they could have done, 3 or 4 prior to that and learned from that experience. And I think what's valuable in terms of the takeaway is not just the return on investment, but it's the experience you get from actually doing it.
That's it, and becoming smarter, like Kiyosaki said. I think what you could see from your situation, just say doing different investments over time, is if you take the risk, invest, and win, you're going to be happy. You've done well. If you lose, you're going to be wiser. That's the thing about losing in that type of thing. Your experience is going to add to your knowledge. So it's going to carry with you moving forward. It's going to be a tool moving forward. So
for our listeners, right, listen to Uncle Zah and Uncle Sam. Start out early. Be aggressive, and we're going to go on to making mistakes and all of that sort of stuff. But that's when you can make the mistakes. When the mortgage is not there, when the kids aren't in school, and all of that sort of thing. Make those mistakes, as those mistakes turn into your experiences, and it's basically your education.
Your knowledge.
Like my wife and I, we have this thing where we talk about every time we fail in business, right? And when we talk about failure, we're talking about we're losing, hundreds of thousands of dollars. It's a bad business deal. Someone's ripped us off, or whatever it is, right?
Yeah.
And we call that a degree. We got our degree in something, and we just don't go there again, or we know how to do it better. And that's how you've got to treat those experiences. That is actually your education.
You graduated from the problem, so you don't have to go back there anymore.
That's right.
No, I like that.
And the faster you can graduate from those problems, the faster you can move on to the next problem.
They're behind you. They're behind you. And hopefully the next problem is harder and bigger that you have to face.
Let's go to number 2.
Number 2, the more you give, the more you receive. So sort of like what goes around comes around. I'll just do the quote from Robert Kiyosaki. When someone I meet doesn't have any money, it just means they're not giving something. So that's pretty interesting. I think that's quite clinical, what he's saying there. So he's sort of saying that if you're not offering anything to the world sort of thing, nothing is going to come back to you in return. If you're not providing a value to the space or to the environment, nothing's going to come back, which I guess to a certain extent is true. I think it's quite clinical, like I said, maybe a bit harsh, because there are people out there doing things, helping people, maybe not giving in a monetary sense, but in effort and time and things like that, and still getting the return. But it's still a very, poignant rule to follow.
Look, it's not just about giving to charity or anything like that. It's more about just giving to the world, like you said, like offering more value.
Yeah.
I'll run through an example. We had a cancellation for a client yesterday come in, and it was going to be a big strategy session. It would have lasted, say, 2.5, 3 hours. Like it would have been a monster, right? And I was telling someone about it yesterday that we had this cancellation, and it was frustrating because we were really excited to present this plan and strategy to this client, and it wasn't about the business. It wasn't about us securing deals. It was about providing that solution for that person. And I ran through that solution with a friend of mine who I was just discussing what the plan was. And you know what she said? She goes, wow, that would literally change her life. That will take her from zero to hero.
Yeah.
And what you've created for her is not something that anyone can do. And when she said that, I thought, you know what? Like, it really is about doing meaningful work,
Yeah.
right? And our work is about giving more than receiving.
Yeah.
Because then we get paid for it, really.
At the end of the day, that's what we're trying to do. We're in the business of helping people. So the reimbursement is, of course, money at the end of it, but our actual aim is helping people.
And it
that's what
feels
we're trying-
good.
Man, when you solve someone's problem and they didn't know how to solve, you know, it's a very satisfying feeling.
It's
Massive.
very fulfilling, right?
Yeah,
So
no.
if you can embark on that journey and figure out what is it that you can give, right? And forget about the monetary value, forget about all of that other stuff that comes with it. Just figure out how can you impact someone else's life positively, then, mate, you're gonna succeed in life.
Coming back to business, I think as well, if you focus on that provision of value that we try to do with our clients, you know, giving a lot of value up front, there's no invoices up until when we actually help you. The client themselves, in a business sense, is really going to value that. You're not counting the time they're spending with you. You're not invoicing them every week. They're going to see that you cherish your relationship, and that business relationship will flourish.
Okay, but there is one thing that we need to remember.
Yeah.
As you go on this journey and you are, say, generous with your time, generous with your money, or whatever it is, and I've done this over and over again, where people have taken advantage of you, right? They'll rip you off, they'll take what they can, especially in Sydney.
Yeah.
Because Sydney's a very cutthroat. It's a
man.
brutal city,
Yeah.
especially to do business in. And, you know, like, what happens is that people will rip you off. People will rob you. And that could be your time, money, whatever it is, right? But what's important, and all of my mentors have always said it to me, stay generous, don't ever change, right? Because you're going to do it to the right person one day, and that person will reward you tenfold. And that's true. That's true. And you do have a few bad eggs when you're on that journey, giving more than receiving. But it does help when you stay generous, because if you turn into like one of those bad people, you know, you're never going to get it in return.
No, you're gone. You're gone.
Number
Okay,
three.
Number three, very important one. I think probably one of the most important. Change the way you think. So here we're talking about mindset. I think really when it comes down to it, just in life in general, mindset's really the biggest thing affecting what you do on a daily basis, even into the future.
Well, how many negative people you know?
I know of them, but I avoid them. So what I try to do, you know, there's massive amounts of negativity out there. I just try and avoid it. So one of the rules with me is as soon as I can get a vibe of negativity from someone, I don't want to deal with them anymore. Life's hard enough just going through the motions without having someone else imparting their negativity on. You already have negativity. You're dealing with yourself. You don't need theirs. So I think very key thing to do is really be conscious of how you're thinking. Always try and focus on solutions. Don't focus on the problem. Focus on your solutions. I went to this a really good session or seminar with the Australian Institute of Management a couple of years back, and they identified in team building and how to create a nice team environment, things like that. They said, it stuck with me just because it was very unusual. They raised this concept called a spiky balloon. And what they were trying to explain is that if you can take, for example, a team being all of these helium balloons, they're filled with helium, they're going up, they're positive, they're happy, they're on the upward trend. What you want to try and identify in your life or business group or whatever is these things called spiky balloons, which are these balloons amongst these helium balloons with points on them that are bursting.
Pop. Yeah,
and so instead of that collective keep going up, you're starting to drop because of these negative influences in that group, just popping and bringing you down. So
very similar to the crab in the bucket.
I didn't even know that one. What's that?
Well, there's a bunch of crabs in the bucket. As soon as one tries to escape, another one will pull them back down.
Yeah, 100%. Exact same.
But you've got more positivity with the helium analogy,
This
right?
is like a mindset. The same thing with the crabs, but I found it really, it stuck with me because I'm like, that it makes sense. And I don't know, subconsciously since then, I've just started eliminating those types of people. Wherever you see it, avoid it, because at the end of the day, you have to sort of protect your energy and your mindset from these things.
Man.
Otherwise,
That's a really good analogy, Sam. I like the helium. We should do a podcast with helium balloons.
Spiky balloons.
Then it could be like, change the way you think. But that's a great analogy. I like that one, man. I think it's more about being, focused on the solution. So, like you said, change your wording.
Yeah.
And this is, Kiyosaki says this as well. He goes, go from can't to how.
Yeah.
Right?
Yeah.
How. And we always talk about this in our podcast, right?
Yeah.
And look, I have become so good at solving problems. And I actually look forward to encountering problems now, because every time I get a problem, I'm like, how can I fix it?
How can you fix it?
How can I buy more property?
Yeah.
Not, I can't borrow any more money.
Yeah.
How can I borrow more money? How? Because all of a sudden you start thinking of the possibilities, right? When you say can't, you've roadblocked.
Yeah.
There's nothing, you're stopped, right? You got to go how.
I have another quick saying, just touching on that. I can't remember where it comes from, but it said, the person who says he can and the person who says he can't are usually right.
Yeah.
So it's all about your mindset. If you think you can, you'll be able to get in that zone where it can happen. So mindset, we talk about mindset heaps over time, and
It's important.
Kiyosaki obviously has identified that as well. Just a quick one. The quote we got for this, change the way you think, for Kiyosaki's, from his point of view, was, I used my bill collectors as an inspiration to work harder. So instead of seeing the bill as a negative, he's like, how do I make more money? Which I know you're a big fan of that thinking as well.
I love it. Go to zero. Go to zero. And I don't look
money.
at $0 in the bank account as a bad thing. Actually, it's a fucking good thing. Because I tell you what, when you got $0 in the bank, you wake up 5 a.m. every morning and you're like, who's got my fucking money? Right? Because I've got to go and get it.
I have to get my money.
And you've got to use that as inspiration. People will look at that and go, oh, I'm broke. Right? And that's a bad thing. No, it's a good thing. Because if you had $2-3 million in the bank, you're getting lazy.
Lazy, yeah. Again, another mindset thing.
Love it. Number four.
Number four. Okay, very good one. Focus. So with Kiyosaki, he said what his take on focus was, follow one course until successful. So that's his acronym, which makes sense. I think in this day and age for young people, given technology advances and all that with the iPhone, I think it's going to be very difficult, just as a comment, for younger people to keep a focus. I find it hard, and I've already gone past, trying to get my career started, business started, all that kind of stuff. It's hard having this thing in your pocket that's a distraction. So I think even more so as we go further into the future with technology, it's going to be hard to focus and stay on one thing at a time.
You know what's hard? If our listeners have done this before, and everybody's done it, right? Pick up a book, right? Start reading and try and not look at your phone.
Oof.
How hard is it? It's actually quite hard, right? I've now disciplined myself to just put my phone away, but the thoughts that come into your head on all of the things that you want to sort of go to, other than focusing on the book that you're reading, and that's just an example, but what Kiyosaki is saying is more so it could be an investment strategy.
Yep.
It could be your job. It could be a career.
Yep.
I think too many people, they dabble and they jump from one thing to another. And what they've got to understand is just go hard in what you're doing and get really fucking good at it.
Yeah.
Like just go really, really hard on that one thing and achieve mastery.
Yeah.
And once you achieve mastery, go and transfer that into something else, into multiple streams, right? Like Grant Cardone talks about it all the time. Like, don't stuff up that main stream because you hear everyone saying, you need multiple streams of income, but that doesn't mean like
neglect
have
the main one.
multiple streams of shit income, right? It's like get one going really, really well and then venture into something else.
Yeah, I agreed. I think just going back to younger people as well, I think we deal with a lot of young people, right? Trying to get into the investing space.
I feel old now, Sam.
No, but all I want to say is on focus is that people have maybe a naive thought that they can enter into whatever they're doing at the top. We see it a lot of the time, just amongst people in general, thinking they don't have to go through the hard yards, which requires this focus to get to the top. They might do it for a little bit, and because they don't have the focus, they go, fuck this, I'm out, I'll go do something else. So they're chopping and changing. So I think the focus is very important, because if you don't have it, you're not gonna excel in anything.
They can't go through the shit, right? This is the thing.
Everything has the shit.
Yes,
you have to go through
any
whatever
business,
it is.
any course that you do, anything where you want to achieve mastery, there's going to be a really bad point where you've got to push past that resistance. And you've just got to keep going, and you've got to stay focused. And every day you've got to tell yourself, tomorrow's a new day. I'm going to get better progressively every day. And you know what? Like, in every business I've created, I had to eat shit for like 2-3 years, right? And it's hard.
Yeah.
It's really hard to stay focused. But I guess what I can tell our listeners is that it's worth it in the end. If you really push past it, do it for 4, 5, 6, 10 years, you will become the master at what you do.
Nothing worth having comes easy. Good saying.
Love that saying.
Nothing,
Love
you
that
have
saying.
to push through to get there.
Number 5.
Number 5. Hard times bring new opportunities. Kiyosaki had a quote saying, "Depression is the best time to make money." Okay.
So this is 2020. We're all depressed, right? Like we were all wanting to
We're
blow our
sad,
brains out. It was really hard, but it brought on new opportunities. Like I explored new opportunities. Like I never used to be into commodities, crypto. Like if you go back into previous podcasts, I'll be talking shit about crypto. I'll be talking shit about gold and all of that sort of thing. But now, because I'm trying to hedge, and it's forced me to look at other asset classes, which has been great.
Yeah.
Like the opportunity has been doing more education, and I guess what Kiyosaki's going on about is that when there's a depression, asset prices, for example, deflate, and that's where the buying opportunity is.
They say when you make money when you buy. That's a common saying in investing, and it sort of makes sense. So in a depression, the markets are usually down, obviously. Buffett has a good quote saying, "Be fearful when others are greedy, and greedy when others are fearful," which ties into this. So in a depression, everyone's shitting their pants. That's when you should be looking at where's the opportunity.
Which was last year.
Yeah.
Last year, I was shitting my pants. Like it was a scary time. Like we had no idea what was going to happen, right? I had vacancies in about 3 or 4 of my properties.
Yep.
Not all, but quite a significant portion of my properties went vacant.
Yep.
I had restrictions down at one of my businesses where we couldn't trade for longer than 30 minutes, all of these different things. And we're like, how are we going to make money, man? Like, how are we going to pay our staff? How are we going to pay the bills, So it was a hard time, but it forced us to adapt and to adjust and to look into other business ventures, look into other asset classes, right? We're now looking at things like commercial property and all of those different things, right? Where we weren't looking at that last year or the year before, pre-COVID, right? So I think what's happened with these hard times, it's forced me to learn and educate myself on so many different things. And I mean, I don't think anyone's really fearful now. I think everyone's being gready right now.
It's it's a different atmosphere now. Everyone's looking quite rosy into the future, which is good. I actually took advantage of this Kiyosaki's saying here, where the depression is the best time to make money. Back in GFC time, 2008, I remember the stock market went crazy. I'm not big into shares, but at that time, I'm like, okay, what's the opportunity here? And at the time, I had some friends that were in the share space, and they were like, buy big 4 banks. The government won't let them fail. Buy them. They drop by half. And I bought, I think it was ANZ, for about $16. And about 4 or 5...
What made you choose ANZ out of the big 4?
I don't know, to be honest.
Like the colour, blue?
I'm not sure. I think I wasn't a fan of CBA for some reason at the time. I don't know why ANZ, but any one of those big 4 was a good buy at that time. In the depression, the economic circumstances were bad. Everyone was quite scared. Everyone was selling stocks, especially bank stocks, because the thing in America was about banking system.
It was a financial crisis.
That's right. So everyone was getting out of banks. And the guys that I was dealing with at the time were going into banks. And we bought at about $16 for ANZ. About 4 or 5 years later, upon recovery, it doubled our money.
Wow.
So that's just an example.
Wow,
of that
you're
type
rich.
Not rich,
You're
but
rich. What'd you do with the proceeds? Silver?
I put it in silver at the highest time in history, and then it declined. So I lost my money there. So
Went
it's
back
all,
to
it's
zero.
all balancing, man. So I learned
I've
from
got
both.
I've got a good story post GFC. So I bought my first property post GFC, 2008,
Ooh, yes.
and it was a house near where I grew up.
Yep.
And it was, I think, 12 months prior was listed at 450.
Yep.
And didn't sell.
Yep.
And then obviously the GFC hit. I ended up getting it for 340 because everyone was shitting their pants. Right?
100 grand?
Yeah, well, pre-GFC
Yeah.
2007,
Yeah.
it was listed at 450, didn't sell, didn't get any bites. It might have been worth, could have been worth like 420, 430.
Something around there.
So yeah, about 100 grand.
Wow.
More it was
Yep.
valued at. And then so I picked it up at 340. As we recovered, because what happened post-GFC, they just cut interest rates because
Yep.
we had I think we were paying like 9, 10% back then,
quite
right?
high, yeah.
So they just cut it in half down to like 6% or something. And I think a year after I bought it, it was valued 100 grand more. So it was back to
Wow.
450.
Wow.
Right?
Yeah.
So, I bucked the trend. I didn't know what I was doing back then. I just was like, I'm ready to get into the market. I'll just buy something.
Yep.
And it was just perfect timing,
Yep.
right time, right place. And it's a really good example of
Yeah.
when times are depressed, go for it.
There's still opportunity out there.
Because there's always going to be tomorrow, right? The sun shines after the rain. It will happen. It may be not tomorrow, but the day after that, it's going to happen.
Everything is a cycle. It goes up and down. It's
Let's
always
move on.
happening.
Number 6.
Number 6, design the business properly. Okay, I'll just go through what Kiyosaki said in relation to that. Design a business that doesn't need you to continue raising the capital. Very, very important point to our business listeners out there. People in business are always having this issue about how do I design the business so it can operate a bit efficiently, effectively without me there. It all stems back to really identifying what you provide value to the business, whether that's you're being the face of the business, the guy that's doing the deals, the guy that's organizing the relationships. What's your value proposition in your business? And then trying to get other people to help you do the other things. That doesn't require your time. If you're able to do that, you'll be able to design a business properly. And why you're in business is for a bit of that lifestyle play with the extra income, which is going to allow you to do that.
Well, you don't create a business to create a job for yourself, right? You create a business because you want the lifestyle, you want more money, you want the unlimited cat.
Yep.
And you and I discuss this on a daily basis, how to create better systems. It's all about, okay, how do we leverage our strengths, right?
Correct.
And the stuff that we're weak at or the stuff that's mundane, let's get other people or other things to go and do that for us so that we can leverage our time better. So, for example, in my business, my strength is in the relationships and presenting and strategizing and coming up with plans for clients. Like
Solving the problem. You're solving
the actual problem, right? But my weakness is the back end, like the admin and the contracts and all of that sort of stuff, even the finance. Like it's too mind-boggling for me. It's too...
You can do it, but it's taking you away from what you're
truly
most
good at,
valued.
right? I've got a gift
Correct.
and I've identified that gift. So for me, I need to design a business, which I have, right? Where I spend all of my time on my strengths, presenting, doing deals, strategizing, planning, right? And all of the other stuff, I outsource, right? And now I've got this business that provides me a great lifestyle. It's very meaningful and fulfilling for myself. And it's something that I want to do for the rest of my life.
Yeah.
Right?
There's only a certain amount of hours in the day, and if you can really get help from people that are going to do that other stuff that isn't your core strength, it's going to make your business as successful as it can be. And we help clients do that all the time. We're trying to help them really reap the benefits of being in business. There is a risk being in business. Really what you want to do is take that risk but make it as much of a return on that risk as possible.
Agreed.
Done. Number 7.
Know what you are working for. So, Kiyosaki's quote here is work hard for passive income. Now, my take on this is, and also Kiyosaki's, I completely agree with him. He has 3 types of income. The first one is earned income. That comes from what, Sam? Earned income?
Your effort, I would say. Like a
Job. Business.
Business. You're doing something for the money.
Trading time for money, right?
Yeah.
Everybody has it. Then there's number 2, portfolio income, which is usually capital gains. So if you have a property that goes from 500,000 to 600,000, then the portfolio income is $100,000 there. And the third one's passive income, which is the ultimate. It's the golden goose, right? That keeps laying the golden eggs.
Yeah.
And that's what you want to work towards. So things that cash flow, that yield very well, that you're going to be able to retire on that income, because at the end of the day, you're not really going to retire on capital growth. If your home goes up from 1 million to 2 million, you can't spend that 2 million, right? You need to sell that or refinance it to be able to tap into it. But what you're really going to retire off are the yields, are the income. So, you need to know what you're working for.
At the end of the day, we are all doing the same thing, really. What are we all going to do when we're 60 or hopefully earlier? Retire. So everyone's goal really that is in the workforce, if they know it or not, they're working in order to retire at some stage. And what you need to retire is a passive income. So it's obvious to us that's what's occurring, but people busy in life might not realise what they actually.
They don't know the end game.
The end game, right?
They don't know the end game.
Even highlighted more so in my experience with tax and accounting is that people don't even look at their super. When really super is that nest egg that you're building, you don't even know about it. That's going to fund your retirement, give you the passive income. And
it's not just about retiring and sitting on the beach doing nothing after you're 60 years old. I would actually consider myself to be retired. I'm actually, I would say I'm retired because I choose to go to work every day because I love it, right? I make great money. I have investments that throw off great cash. I'm very passionate about what I do. I love it, right? Doing these podcasts, I absolutely love it. And, I love business. I love hanging out with you, you know what I mean? So to me, I feel like I'm retired. Like I actually really enjoy my life, right? And that's because I've got that income to be able to allow me that choice. Like I don't have to go to work, right? Now, I think what a lot of people chase are things like the big house, the fancy car, the designer goods, or the holidays, all of that sort of stuff, which, I'm a big fan of as well. But that's not the answer. You've got to be chasing freedom.
Yes.
Right? Freedom is the end goal. You don't want, like if I don't want to go to work, right, I don't have to.
Yeah.
That's that's freedom.
It's powerful,
man. Imagine if I had to go to work because I've created this thing where it's like, oh my God, I have to make money today. Otherwise, I'm not going to have a roof over my head. That's shit. You want to get out of that, right? Work towards passive income.
Yeah, it's the only way you're going to get out of that need for working. It's going to allow you the time freedom, what you raise there. You have that freedom to do whatever you want with your time. It just so happens that you want to keep helping people.
Man, we love what we do.
That's it.
We love what we do, and you want to work towards that. Number 8, don't be afraid of losses.
Kiyosaki said that most successful entrepreneurs have gone bust, and he gave some examples. So we've got Oprah.
Did he say Czar?
I don't.
Czar's gone bust.
I think he did. He did mention it. But you have, and at the time it would have felt like shit. But what did you learn from it?
You feel like the whole world is caving in, right? So I think what I've written down here is in capital letters, be prepared to die, right? And it's true. I was actually having this conversation with Jade, my wife, last night. And I remember this one guy that I used to work with in King's Cross, and he was it was a bit of an identity. He was a bit of a nutter, and he used to look after security and all of that sort of thing. And he was looking after a venue. He told me this story. He was looking after a venue, and this, I guess you could call it a rival gang, came and tried to put it on the doorman, right?
Shit. Okay.
Now, before a fight could erupt, this guy was the spokesperson, right? Like he was the head of security. He knew everyone, and he was one of those types of guys. And he said to the leader of the other gang, goes, what's going to happen tonight is somebody is going to die. It could be you or it could be me. But someone's life will be taken away from us tonight.
Wow.
Right? And he said, if this pops off, someone will die, right? Now, it could be me, but someone will die, right? Now, he put that word of warning out. These people walked away because they knew that this guy was prepared to lose.
Not fucking around.
Now, I always took that. I always took it with me, right? My father used to say to me, if you get into a punch-up on the street, be prepared to die because I tell you what, you'll be the most feared opponent. Now, you can transfer that into business, right? If you can show people you do not give a fuck, you'll end up on top. The people that we admire the most, right? The people that are most successful are people that don't give a fuck. Notice that?
Yeah.
Conor McGregor, Donald Trump, all those guys.
They do their thing.
They don't care,
They just do their
right?
thing.
They don't care. They just go and do their thing. And they're the most successful people in the world.
They're not afraid of losing.
No.
They put it out of their mind.
Be fearless.
No, that's a very powerful story, man. Very powerful.
Yeah, well, it's a lesson.
It's very
really.
heavy, but if you can apply that to different parts of your life.
Look, it is heavy. We don't tell people. We don't want people to think, go out and start trouble and say to people. No, it's actually a really good line, right? If you're going to get into a punch up,
Someone's going to die tonight.
say someone's going to die tonight, and then all of a sudden they're like, oh wow, hang on, I'm going to second guess this, right? And they're going to walk away. It's a perfect exit strategy.
And he won at the end of the day. He won. He won. He got his way.
He won. There was no violence, right? Like it was very, very powerful. But I know the bloke. He actually would be prepared to die. That bloke, right? And for him to say that, like he's got the reputation to back himself up, right? Like people understand who he is.
Yeah.
But you want to build that reputation for yourself. Build the reputation where people look at you and go, geez, that guy's not afraid to lose. All of a sudden, you will become feared, and then you will be very, very successful in anything that you do because people will respect you.
Yeah.
People respect people who do not fear a loss, right? And you only learn this through experience, right?
Yeah.
Tackle it head on. Number 9, we've got to move on. Aim to acquire assets.
We talk about it all the time. That's what we're in the game about, is putting your money to hard work, and that is effectively buying the best assets you can. Rich Dad, Mr. Robert Kiyosaki says, his company is always getting stronger because he's adding assets to it all the time. So he sees the value in, okay, if I'm talking accounting, profit and loss, they don't really care about profit and loss. That's your income and expenses. What they want to look at is your balance sheet. What assets do you have there that's going to pretty much bolster your business, allow you to have that time freedom? It's going to keep feeding you income on the profit and loss.
So we're not talking about bullshit assets like your home and your cars and your jewelry and all of that sort of stuff. Stuff that's generating income, putting money in your pocket. So if you've got a rental property, commercial, residential, it's returning 5-6%. You're borrowing money from the bank at 3%. Then that's an asset. That's what you want to accumulate.
Yes.
So 40 years and under, you want to be acquiring as many assets as possible, as aggressively as you can, right? And then you'll move into your consolidation phase where you can enjoy those assets later on in life.
So the
Number
aim
10.
acquired. Number 10, stop saving money, hedge it. What did he say? I think the big mistake is that I hear so many people say it's important to save. Kiyosaki said that's ridiculous.
That's ridiculous.
And we've talked about this before, about saving. You changed the word from saving money to saving capital.
Yes.
Which was I like that a lot. So
because capital is to be used.
That's right. So you're still saving, you still need to have a saving, but it's not of money to just store, it's of capital to deploy. So as long as you identify that change, you'll be sweet.
So inflation is a big topic, right? We've done a full podcast on inflation, and even for us, we've now ventured into commodity. We were in commodities, halfway through last year, but now crypto, right?
Yeah.
We've only just recently got into it, and thanks to your brother and his education on it.
He's probably going to set up a course online.
He's our official consultant and advisor. But we've looked at hedging our money as well, not just in real estate, not just in commodities, but in crypto as well. So if you are saving money to save and store cash, it might be a good idea to look at these, asset classes. Because, like some people, they're not saving for a house because they might not be able to get the loan. So if you've got, $200-300 just sitting in the bank, don't keep it there. Like hedge it.
Yeah,
You know?
yeah. And the beauty about some of these other assets you can put your money into to hedge, like cryptos or even shares, is that they're liquid. So they're not like a property. It doesn't take a long time to get your money back. So you can put it to use. It's better than keeping it as cash.
Yeah, you can still access it.
Man, if you're lucky enough, put it into some sort of crypto asset that goes up 30%. If you got 10 grand in it, that's $3,000.
Look, some of the money that people are making at the moment through crypto is insane. And this is the reason why we say hedge it, don't invest it.
Yeah.
Like, I think crypto is a really good, I guess, alternative to cash.
Yeah.
I think for me, I've got a net worth where I can have a bit of fun with it. I wouldn't say put everything in there, diversify, be smart with it, because you just never know. It's quite volatile.
Yeah.
But in saying that, now's the time you've got to do something with your money. Like, you can't just sit it in the bank and think, okay, interest rates will go up one day and, I'm going to get a good return. Like, how much can they actually go up anyway? So now we live in an era where you actually have to get up off your butt and do something.
Do something. Just put it into something. Have enough money for the bills to get you by. Whatever excess, have it in something. Don't keep it as cash.
Uncle Sam, thank you for today's podcast, 10 Rules by Kiyosaki. I think we should do another one of these because he's got so many more rules and we can add so much more on top of that. So keep an eye out for, part two of the Kiyosaki rules. Guys, thank you for listening. I really appreciate it. Thank you, Sam.
Thanks, guys.
We'll see you next time. Peace.